Record run continues on Wall Street, fueled by tech stocks and rate cut hopes. The S&P 500 and Nasdaq both gain over 1% to close at record highs ahead of the release of CPI numbers for June later today. Asian markets trade largely higher following a strong handover from Wall Street. The Japanese Nikkei hits an all-time high above 42,000, while the GIFT Nifty is also suggesting a higher start for the Indian market. Crude prices rise marginally. Brent continues to trade around $85 a barrel as U.S. inventory falls. Gold prices rise on expectations of a rate cut by the U.S. Federal Reserve. The earnings season kicks off with IT bellwether TCS set to report first quarter numbers after market hours today. The street is expecting growth to be higher than that seen in the past 5 quarters, while margins may come under pressure due to wage hikes. Sources say the North Block has a revenue cushion of at least 1 lakh crore rupees ahead of the budget to balance fiscal consolidation with growth measures. Sources also tell CNBC TV 18 that the government may announce a new scheme to boost medical device manufacturing with a focus on improving quality and reducing imports. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines, very close to the budget. And today we kick off the earnings season as well with IT bellwether TCS reporting numbers. We'll discuss all that. But first up, let's take a look at the Asian markets. Largely higher. If we talk about Nikkei, that's really powering through above that 42,000 mark. It's actually at 42,420, and that is a record high for that market. Hang Seng is doing well. That one is up 1.2%. The Taiwanese index is surging as well. It's up 0.8%. So largely it's a green looking market if we talk about the Asian markets. And the GIFT Nifty, that'll come up for you on the screen because that one is indicating that the start for our own markets, that could be in the green. So that rate will come up for you in just a bit because that will indicate the moves for our own markets and the way our markets will open up as well. So 50 points higher as per the GIFT Nifty after that fall yesterday and further recovery. This could be an interesting day of trade as well. Let's talk about the U.S. markets. Wall Street ended higher as S&P 500 added over 1% to close above 5,600 for the first time, while Nasdaq advanced 1.1% to a record close. The Dow Jones gained over 400 points, and all eyes on the June CPI inflation data due later today, which is expected to rise 0.1% month-on-month and 3.1% on a year-on-year basis, while core CPI is expected to rise 0.2% for the month and 3.4% from a year earlier. Let's listen in to some opinion coming in from JP Morgan's James Sullivan on inflation in the United States, the movement of the dollar, and the impact it can have on emerging markets.
I think by definition you'll see inflationary policies. And again, without commenting on the direction or wisdom of policies, by definition, if you have higher tariffs, last time around 75 to 80% of those costs were passed on to the U.S. consumer, so inflationary. If you are taking measures that in effect reduce the efficiency of the global economy, like restricting exports and imports, as productivity falls, then inflation rises. And so I think the direction, particularly for the U.S. dollar, is relatively clear if that is the outcome. That implies weak EM currencies and potentially some issues for Asian markets if that's the outcome. Historically speaking, strong dollar is not positive for emerging markets, both in terms of asset allocations, it's easier to own dollars, but also in terms of balance of payment and current account issues across a number of our markets. The United States government, both existing as well as potential future, depending on what happens in the election, have been very clear that there are elements of the technology supply chain that are very clearly considered national security issues. And they've started to take steps to directly address that, as have other countries around the world. It's not just a U.S. issue. It's I think, wider than that. And so this bifurcation that we're seeing of global supply chains, particularly on the semiconductor side, I think continues regardless of who is in office.
All right, let's get you the final update on our global market wrap this morning. European stocks closed higher on Wednesday. The French CAC index finished the session 0.8% higher, while the British FTSE advanced 0.6%. The Stock 600 index also closed 0.9% higher, as almost all sectors ended in the green. Markets are now awaiting the June inflation data from the US and Germany due today to gauge the timing of potential interest rate cuts. Okay, so it's green across global markets, and that's the action and opinion as well. But how will these cues impact our own markets? We have a research team joining in to tell you just that. This is our Power Prep segment. Good morning, guys. Hope you all have a good day today. Let me come across to you, Hormaz, first up. looking like it could be a green day today for our own markets as well.
A green day indeed, and considering especially what happened in the markets yesterday. And if I start off by saying that we had the biggest single day fall since the 4th of June in yesterday's trading session, but then I combine that by saying that the fall yesterday was only 0.5%. So that summarizes the kind of market we've seen since that Lok Sabha election result day. This is the 24 sessions that we have had. We have declined only in 6 of them. The Nifty, the biggest fall of that, excluding yesterday's session, has only been 0.3%. So it just shows the kind of recovery that we have seen from the lows that we made. Now, even in yesterday's session, even after we ended in the negative, we still recovered almost 180 points from the lows of the day. So that buy on dips template continued in the market despite the fact that we ended lower. And the way the US market handover has been, it's been a very strong handover from Wall Street. The S&P 500 on the record high, as did the Nasdaq. So that bit of rub off might happen in today's session as well. And the GIFT Nifty is also indicating that there will be a slightly positive start. It's not as strong as the Wall Street handover has been, but the implied open is still suggesting a 50-point uptick as we speak. Now, it was the heavyweights that pulled the index down yesterday. Reliance, HDFC Bank, ICICI Bank, but it is the same heavyweights that recovered from the day's low, and that sparked the recovery in the Nifty as well. Reliance was up almost 1% from the lows of the day. ICICI Bank recovered 0.5%. HDFC Bank too saw a bit of recovery. What didn't see a recovery though was TCS, and that was also one of the index laggards in yesterday's trading session. Ended at the lows of the day, and it will be reporting its first quarter results today after market hours. So that will be the key stock to watch out for. Some other important cues that we need to watch. We'll keep an eye out on M&M as well if there is any follow-up selling after the 7% drop that we saw yesterday, being the top index loser. So it's also the Nifty weekly expiry today, so there might be some volatility at play on that front as well. Some important global cues. The US jobless claims data comes out later this evening, as does the CPI and the core inflation print that comes in from the US as well. So important global cues to track, important domestic cues to track. It promises to be a very important session for our own markets. Back to you.
Okay, all right. It'll be an important session. Thank you so much, Harmas, for that. A lot of stocks that will continue to be on our radar. Sudarshan has that list. Good morning, Sudarshan.
Morning, so we'll start with companies which have reported earnings for Q1. First one is Kesram Industries, has reported subdued earnings. Margin has fallen more than 200 bips. Revenue was down 12% and EBITDA has slipped 33% year-on-year. And Rayon and Chemicals EBIT also have reported losses. But focus more than earnings will be its merger with Ultratech. Tata Elxsi, it was a mixed Q1. Transportation business has lifted earnings while healthcare business was under pressure. Revenue was higher than estimates while margin has missed. Constant currency revenue growth was 2.4% versus estimates of 2 to 2.3%. JTL Industries Q1 revenue was up 2%, EBITDA has increased 12%, EBITDA per ton has come in 1% higher year-on-year and higher 3% sequentially. Sula Vineyards has given Q1 updates. Net revenue growth was at 9.7%. Own brands revenue was up 2.7%, while hospitality revenue was down 2.5% year-on-year. And company says Q1 was impacted by several dry days. RB Infra June toll revenue was up 35% and Q1 toll revenue was up 32%, and it says recent tariff revision will further improve collections going forward. Glenmark Life and Glenmark Pharma will be in focus. Glenmark Pharma will be exiting the company and announces sale of its 7.85% holding via OFS, and OFS floor price is rupees 810 per share, which is at a 7% discount to CMP. IRCTC launches beta version of Delhi Metro Rail QR code based ticket. And through this metro tickets, Delhi metro tickets can be booked up to 120 days in advance on its IRCTC website and on its mobile app. Shalby gets 30-year lease for Asha Parekh Hospital in Santa Cruz, Mumbai. And lastly, Yes Bank, Moody's has affirmed its rating and upgraded the outlook to positive from stable. So keep an eye on these stocks that might be in focus in the trade today.
Okay, all right. That's a long list, but thank you so much, Sudarshan, for getting us up to speed with that. Let's talk about the F&O cues. Mangalam is joining in finally with all the cues from that space. Good morning.
Good morning. So if you look at all the frontline indices yesterday, you look at the Nifty Bank as well as the mid-cap index, that would tell you that it was a down day. It was a down day indeed. The mid-caps had it worse with, a much bigger market breadth in favor of declines. But what also happened was that yesterday the market tested the lower end of the range that we've been trading in, and that has been maintained. From the lows, we saw a big recovery. So on July 5th, the low on the Nifty, 24,169, coincided with yesterday's low of 24,142 as well. So 24,150 remains an important support to watch out for on the lower end. There was purchase for both the DIIs and FIIs in the cash market. A large part of that could be attributed to a couple of large trades that took place as well. But there was decline in index futures premium from about 52 points. The Nifty futures premium for July came down to about 30 points. And that told you that there was selling by the FIIs in index futures. And that's exactly what happened. Nearly 3,400 crore worth FII selling in index futures, where they unwound 26,000 long contracts and they added about 21,000 short contracts. What's interesting about this is that the FII long exposure, which a couple of days ago was 84%, has now come down to 80%, still net long. And the net long contracts have come down by about 50,000 contracts as well, from 3.92 lakh to about 3.38 lakh itself. And that's interesting because today is a Thursday, it's Nifty weekly options expiry. Yesterday, remember, we told you that the put-call ratio is heating a little bit around 1.28. That's come down to a bit of a normalized range. So it will be interesting to see where the market goes from here, because the 24,300 call and the 24,400 call are extremely active. At the lower end, the 24,200 put active too. What are the option writers expecting? Resistance between 24,375 to 24,420 and support at around 24,150 to 24,175 itself. The one stock that I'm watching out for is RBL Bank. It's entered F&O ban, making it the 10th stock this series so far to enter the F&O ban.
Okay, all right. Thank you so much, Mangalam, for all those cues. And thank you guys for joining us and prepping us up for this trading day ahead. As we slip into a short break, a quick programming note. Will the RBI cut rates this year? Is RBI worried about a bubble in the stock market? Is India poised for a GDP upgrade? Coming up today, a CNBC TV 18 mega exclusive, the definitive RBI governor interview, only on India's most watched business news channel. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. And as we continue to count down to Budget 2024, sources confirm with CNBC TV 18 that the Finance Ministry is looking at a headroom of 1 lakh crore rupees. My colleague Sapna is joining us now to tell us more. Sapna, what are you picking up?
Well, as per our own calculations, it indicates that probably they are already sitting on a 1 lakh crore worth of fiscal cushion just ahead of the budget. So if you look at the top numbers, for example, direct taxes, they have grown by over close to 21% in the first quarter. And our own calibrations indicate that probably around 25 to 30 odd thousand crores worth of cushion is over there. The numbers are significantly higher than the growth rate actually required to meet this year's target that was set out in the interim budget. That's one. Second, even in GST, in terms of GST collections, well, the first quarter monthly average is now around 1.9 lakh crore, which is significantly higher than what it has been in the earlier months. And Y on Y, of course, the increase is much more. We are not really factoring that in, so to speak, because a large part of that also goes to the state government exchequer. But this is an indication of things to come. In H2, once the economy picks up, these numbers are only likely to get better. Third, of course, you have the RBI dividend, and none other than the finance secretary had indicated very clearly, or told CNBC that around 0.2 to 0.3% higher is what they have got from the RBI bonanza. So that, roughly works out to somewhere around 60 odd thousand crores to 88 odd thousand crores. Now, these are not small numbers that we are talking about. So, for a change, after a long time, the government is looking fiscally confident and comfortable as it goes into the full budget preparation. So, basically, the option before the government is likely to be that they might do a bit of fiscal consolidation along with some welfare measures. In terms of reducing the deficit, well, if they choose to reduce it by around 0.1 to 0.2 odd percent, this will lower the market borrowings by around 60 odd thousand crores. So that's one option for them. The second, of course, as I just mentioned, a combination of both. So they may reduce the deficit, bring it to around 5 odd percent, lose around 30 odd thousand crores over there in terms of the fiscal cushion, so to speak. But at the same time, also take up some welfare measures. For instance, whatever are the ongoing central sector schemes, all of them are likely to get due attention. But there could be some higher capex, say for example, roads and railways. Though, of course, capex overall, there's an opinion that it is likely to plateau, so not much of action there. But certain sectors may still continue to get that focus which the central government has been trying so hard. Similarly, in terms of rural development, important ministries like education, health, maybe something for the housing and the solar sector, those schemes are already in place. Something additional can come over there. And also, let's not forget on the tax front, hope is still alive. We can expect some kind of tweak at least as far as the new direct tax regime is concerned. So putting all of this together, they'll have to do a hard balancing act. And plus, most important, probably the most important takeaway from the budget to watch out is what kind of financial assistance the central government is able to provide to Andhra Pradesh in particular, and maybe to Bihar to an extent. The opinion is very clear out there in the market that both the states are facing structural issues in the economy. They are unable to augment their revenues, and their state expenses are far too high. So the center has to step in, and that interim relief is going to be a big ticket number in the budget. So these are the things that we need to watch out for. So despite that additional fiscal headspace that we're talking about, the list here is pretty long and large. However, in all likelihood, consolidation along with welfareism is what Nirmala Sitharaman may adopt on 23rd July.
Okay, take that point. Thank you so much, Sapna, for joining us with all those details. Let's continue the focus on budget. The government is likely to include a new scheme to boost medical device manufacturing in the budget. Sources have told CNBC TV 18 that the scheme will be aimed at improving quality and reducing dependence of imports. Tim C is here to take us the contours of the new scheme. Tim C.
Budget 2024 is likely to contain a new scheme to boost medical device manufacturing in the country. Sources have told CNBC TV 18 that the scheme is aimed for having improved quality and a reduced dependence on imports of medical devices. It may propose medical devices to conform with codes set by Quality Council of India and Bureau of Indian Standards. The new scheme may also seek to have post-market surveillance, regulatory streamlining and clinical evaluation of medical devices. The new scheme will consider strengthening existing manufacturing facilities and upgrading quality. It might also propose a marketing practices code and price control norms for medical devices. However, as we speak, Finance Ministry is still evaluating the proposal and is yet to get finalized. Just to make you understand how big the sector is, well, last fiscal medical device imports by India were at the tune of 8.18 billion and exports were only worth 3.8 billion. So let's see whether the scheme makes it to the budget or not.
Okay, all right. That is some update on the budget and the expectation from there. But of course, we have earnings season, which is back. IT bellwether TCS will be reporting its first quarter earnings later today. Rima is joining us now with what the street is expecting. Rima.
Thanks so much for that. So expect about a 1.5% revenue growth. In dollar terms, 1.3%. In constant currency terms, a revenue growth of 1.5% as the BSNL deal continues to ramp up. The growth in the quarter, though, will be higher than what we've seen over the last 5 quarters. Margins are likely to remain under pressure because TCS has given a wage hike to all its employees effective 1st of April. So the full quarter impact of that will be visible, and margins, according to our poll, should be down 150 basis points. Typically, a wage hike impact hurts your margins by 200 basis points, but there was a little bit of a currency depreciation of nearly 0.5% plus some productivity benefits, and that's the reason why the margin decline could be limited to 150 basis points, and that will drive about a 4% drop in the company's profitability. I think what the street is going to track is not so much in terms of the numbers of Q1, but the commentary and whether the street gets the confidence that things are picking up in the second half of the year. In FY24, the constant currency revenue growth for the company was about 3.4%. The company last quarter guided that growth will be better this year, FY25 compared to FY24. And some of the street estimates are up for you on your screen. They're about 5.5% on an average for FY25, going up to about 8% for FY26. Is there going to be a change in that? I think how growth picks up, the pace and the amplitude of recovery will be tracked very closely. Also, the street is anticipating margins to improve for 2 years, FY25, FY26. Is there going to be any change to that? And of course, generative AI hiring has been very muted. In fact, the company has been bringing down its overall employee base, discretionary demand, etc. These will be trends that we will keenly watch out for.
Okay, all right. Thank you so much, Rima, for joining us with what to expect. And of course, also stay tuned to CNBC TV 18. We'll be speaking to the TCS MD and CEO K. Kriti Vasan, CFO Samir Seksaria, and Chief Human Resources Officer Milind Lakkar tomorrow at 9:45 a.m. And a quick programming note before we slip into a break. We have a big budget exclusive for you today at 3:30 p.m. The CNBC TV 18 CII Budget Town Hall. The entire top brass of the industry body will be in attendance, and we'll quiz them on their budget expectations. Sanjeev Puri, Sanjeev Bajaj, Sunil Kant Munjal, R. Mukundan, Chandrajit Banerjee, B. Tyagarajan, Shenu Agrawal, Vinod Agrawal and many more will be speaking exclusively at the town hall. For 25 years, CNBC TV 18 has been covering the union budget, so keep it with your budget destination for all the big newsmakers and exclusive news breaks. Welcome back. You're still tuned into Power Breakfast. It's time to talk about commodities now. Manisha Gupta is joining us with all the update from the commodity space. Good morning, Manisha.
Morning, Sonal. Thank you for that. I'll start with the crude oil prices, which have seen some more gain, and this is on the back of decline in U.S. inventories. Well, the markets were anticipating 3 million barrels of decline, but EIA has said 3.44 million of a decline is what we're looking at. Apart from that, the OPEC and the EIA are both anticipating the global demand to go not just this year, but grow in the next year as well. EIA has put a number of around 104.7 million barrels per day. So that clearly has been positive and supportive as well. The street will watch out for the U.S. CPI data today, and that would tell you on whether or not you can start anticipating a rate cut in the month of September. In the meanwhile, because of the strength in U.S. dollar, there is a pressure that has been seen for metals. So nickel is trading at a 14-week low. Copper prices have declined for a third straight day, and HRS steel price is also trading at an 18-month lows today. Well, the China consumer prices rose less than expected, and the China producer deflation has extended to 21-month low. So from China as well, it's not very supportive factors, and metals are bearing the brunt of that too.
Okay, all right. So nickel at a 14-week low. There is some softness in crude prices as well. Thank you so much for joining us, Manisha, as always. Let's now move on to some updates from the International Space Station. Looks like Boeing's flights are not just delayed on Earth, but in space as well. After technical issues in the Boeing Starliner, it has left astronauts Sunita Williams and Butch Wilmore stuck at the International Space Station since June 6th. The astronauts addressed their concerns and affirmed that they are confident about their return. Williams and Wilmore confirmed that they'll keep contributing to research till the time they are in the space station. NASA has reaffirmed that there is no hurry to bring the astronauts back, and the ISS is fully equipped to keep them there for up to 45 days. Okay, on that note, we'll take your leave on Power Breakfast today, but stay tuned. Bazaar Morning Call comes up next with all the market action.